953. No, that's, oh my God. Really? Is that really wrong? Hello, everyone. This is Calvin, Professor C here. Thank you for watching my YouTube channel where I'm going to teach all the new mortgage agent making more money and faster. Okay, stay tuned. Hello everyone, this is Calvin, Professor C here. Today I'm going to teach you how to read the credit bureau because I find a lot of new agent has a difficulty understanding the credit bureau. Now first I'm going to show you three different credit bureau. One is decent, one is okay, and one is not so okay, just to give you an example and variety. Okay, so let's go to, I'm not going to make it very long. I'm not going to go explain the credit bureau line by line because I don't think it is, necessary for you to read it line by line. But I'm going to highlight what to look for on the credit bureau and how you can quickly understand a client's situation based on the credit bureau. Okay, so let's go. So I just cross out some of the key information to protect the privacy of the client, although I do have consent from them that, I'm going to use it on the video. Anyway, normally this is, your application number and the name of the client. This is the credit score. The credit score, well, most of the people know what it is. It is actually just a summary of, the overall health of the credit for the client, I guess. It has a lot of factors that is affecting it. Normally when we say the credit is good, we're looking at 720 or over or above, and anything from 680 or 650 to 720 is, it's not bad, and then anything less than that is, you have to be a little bit more careful. Okay, but yes, so 707 is a decent score, I would say, although it does not tell you a lot if you just look at the credit score, because although the score is good, you do not know how it, derive from. Okay, so we're going to look into why it comes out at 707 and, what you should look at other than the score. So these few lines actually give you some idea of, why it is that score. So length of time account has been established. Too many inquiries in the last 12 months. Lack of recent revolving account information and time since delinquency is too recent or unknown. This 4 factor is, kind of hindering the score, and that's why it is not higher. And so let's look at it like this. Length of time account has been established. So maybe a little bit, some of the account is too new. And if you want to know when the account is started, you can look at this line. OPND, is open. So maybe if you look at it, so the first few one is like, this is 2015. This is 2017, 18, 17, 16. So a lot of them are open on 2017, and we are pulling this credit early 2019. Okay. No, actually this is not this one. I printed out 2019, January 31st, but this one is pulled on November 2018. So a lot of the credit are only 1 year old, and that's considered new. And that's why some of the score are decreased, are deducted. Too many inquiry in the last 12 months, that's here. This is the inquiry. So as you can see, if you just look at the 2018, there are like, I don't know what, just roughly like 7 or 6 or 7 of them. Though that is considered a lot, right? If you have more than 3 in the last 6 months, that is quite a lot. Lack of recent LOC's line of credit revolving account information. So maybe they don't have a lot of line of credit there, so that one I'm not worried about it. Time since delinquency is too recent. Yes, if you look at there, I already highlighted. There's one delinquency. This is I'm going to get into this portion detail in a bit, so stay tuned. But you want to see these 3 numbers at 0. That's the best. And if you see a 1 here, that's also the best, right? But there's a 1 here. That means this guy is late on his Bank of Montreal MasterCard once, and the length of the delinquency is less than 30 days. So maybe this guy forgot to pay maybe 3 days or 2 days. It doesn't matter. It falls into less than 30 days categories. So and this happened in 2017 September. So that's only about 1 year ago. So yeah, but things happen. We do sometimes miss a payment. So there's nothing too alarming and too concerned. But that it just gives you some of the reason why this is 707 and not 807. This is why some of the score deducted. Okay, let's forget about this. Let's go into the next item that I want to talk to you about. Here, this is the address that the client has, reported to live there. A lot of time it's good to just look at the address and make sure the profile match your client's profile. For example, if he lives in multi-million-dollar home, and then all of a sudden you see an address from Jane and Finch, then maybe, like, I'm not saying that Jane and Finch is not good, right? But it's not Bridle Path, right? So if you see Bridle Path, and then Jane and Finch, you should talk to the client and ask them, what's going on, why you're living in Bridle Path now and previously is Jane and Finch. Is it someone wrongfully input your address or something like that? Just ask, right? No harm. Okay. And then this are the inquiries. Whenever you there's a lot of things that will affect your that will affect the credit bureau. As you can see, if you go and apply from cell phone, they will check your credit. Obviously, if you apply for mortgage, yeah, this is if you apply for a credit card, this is MasterCard, this is TD Bank, maybe for a line of credit or credit card. This is mortgage. This is again cell phone. Maybe this is opening an account. So opening bank account, getting a new cell phone, credit card, line of credit, getting a car lease, car loan, investment loan. This is B2B, probably investment loan, something like that. Though they will check your credit. So again, we just spoke about it. Is if you have too many inquiries, in a short period of time, it will, make your score lower. So if you know that you're going to get a mortgage 3 months from now, and then there's someone who is telling you to get a, Costco credit card, I think you should say no, just to make sure that your credit score is as high as possible. So that's some tips, okay? Next, this section is, just about your employment. So usually, this is the current employment, and this is, you know, previous employment. And what you should look for is maybe a pattern or industry specialized and all that. So if this is IBM and this is Microsoft, yeah, that makes sense. But if this is, you know, IBM and this is, you know, I don't know, like ABC bakery waitress, something like that, right? Then you might want to, you know, inquire, oh, you know, did you do your waitress during your school years or something like that? Or, you know, if you see a pattern of waitress and, you know, labor, and then all of a sudden this is a law firm, then, you know, you should have some signal that this law firm job might not be so true. Okay, I'm not saying that you can be a lawyer, but, you know, I'm saying that you should ask your client some more questions, because I assure you underwriter would ask you the same question. Okay, so next, this one, you know, this is just a car loan, looks like. So it gives you some detail. It can come from Honda Finance, you know, maybe Acura or Honda, something like that. Roughly how much is owing, and this is when it would mature. So, you know, go and look for the car loan, understand it. Oh, did you buy a car in 2016 January? You know, ask. Okay, and these are they call trade line, Royal Bank, TD Bank, all that. So normally what you need to do is look at the bank or the institution that issue you that. This is the day that they open. This is last reported date. You know, it's all recent. Sometimes they don't update it, and if you see a 2013, then you know this one is already expired, past, or whatever. This is usually the limit. So this credit card is 6,500 limit. This is, you know, the current balance, you know, most up-to-date one. And yeah, that's about it. This one, I don't really care about it. We use, for unsecured line of credit and Visa card, we use 3% as the monthly payment when you input your case in the Filogics, in the expert system, right? So, you know, remember there's a payment that you need to enter. So, you know, 3% of this is what you enter, okay? And this, you know, the card, again, this one, as soon as you see a 1, that's good. 000, perfect. R just means revolving. That means this is, you know, just like a credit card or line of credit. Whenever you pay it down, you can withdraw it. Now, instead of this one is an I, so it's an installment loan. So this is the car loan that, you know, coincide with this 24,000. So this one, just like a car loan, whenever you pay down the car loan, you cannot get it back the money. So that's why it's an I. Okay, this is Rogers, don't worry about it. When you see an I, usually this column in between is the monthly payment or bi-weekly and all that. And as you can see, it's a bi-weekly payment, 188, right? So this is what you use as your payment for bi-weekly, okay? And that's about it. Nothing much to say. Let's look at the next one. It's, you know, slightly not as good. 669 still okay. A lot of A lender, the big 5 banks, and the B lender 669, they have no problem accepting it. Again, the address, I'm going through it fast. You know, as you can see, balance is maxed out. This one usually, you know, to limit. Account is too high, so that basically means maxed out. Let's see if it is the case. Maybe, you know, I guess it's, you know, the This line of credit, you know, that is pretty close to the limit. You know, it's a little bit deceiving, right? This is I don't see a lot of max out stuff. But anyway, this is computer, right? It's not perfect. Anyway. Length of account has been established. Let's see. I don't know. Those are okay, I guess. So don't worry about it too much. I don't think the underwriter would worry about that too. Time since delinquency is too recent. Again, let's look at it. This is some of the delinquency. 2015-16 is, you know, not too recent. This is the recent. Okay, 2017, this is 1 year old. So it's late 3 times. It has been written off. You know, the store is, you know, giving up on chasing them, you know, and all that. Yeah, so this is a R9. So 9 is not good. You know, underwriter will ask you, better have a good answer, ask the client what's going on and all that stuff. Getting some inquiry, not as much as previously, but one thing I do want to point out is they have went to numerous, you know, broker and all that. You know, ask them why. Either they are not doing the, you know, the broker is not doing not doing a good job, or maybe, I don't know, they're shopping around. Just ask, right? You know, they're going to so many different places to get the mortgage. I don't know. This one is a little bit deceiving because this is a joint application, so they don't have 4 Mercedes. You see, this 2 is the same, right? Anyway, I don't care. Sorry if I'm not looking at the, you know, at the camera at you that much, because I'm looking at the credit bureau. Okay, so I apologize for that. So again, let's look at this. This is the meat of the credit bureau. They have some delinquency. There's 2 times the 30 days history, like less than 30 days. However, it is still late. 2015 November, 2016 July. If this is just the only one that is late, I might not worry about it, but there's also this one. Some of the credit card, you know, outstanding are pretty high. You know, might not clear the balance every month. And the rest of this are 0 balance, so, you know, not much to say. I'm not worried about it. I would say, you know, ask them a little bit about this, right? Oh, one more thing I forgot to ask you is, you know, tell you is, you know, when you see an I here is individual, so it's single name account, and if you see a J is joint. Okay, so you can, you know, so this say this J, so this mortgage is joint. Anyway, lastly, I'm going to show you one more credit bureau. This one's 884. This one is near perfect. It's crazy. 884. No, I don't think I have that score. You know, if I see 884, I wouldn't worry about this too much. Just take a look at it. Address, you know, not even a credit check in 2018. Perfect. This is what they do. You know, almost all of them are 0 balance. This one $52. They probably just buy something from Walmart. This probably will clear it at the end of the month, $52. So technically speaking, other than this line of credit, which, you know, I know it's a secure line of credit, so basically it's linked to the mortgage. And secure line of credit, even if there's a $36,000 outstanding balance, I'm not too worried about it because, you know, it's secured by the house, right? So it's not like an unsecured line of credit, which is very high interest. Technically speaking, you can say this guy is zero debt other than a mortgage. Zero late payment. As you can see, all 0 or 1. Like this is some of the kind that you would love to have, at least in terms of credit. So yeah, this is about it. You know, I wouldn't worry about this too much. I hope you learned something. You know, if you like what I teach you, please press, you know, the subscribe button and the bell. That means, you know, every time I have a new video come out, which usually would be weekly, you will get notified on your cell phone or something like that, and then, you know, you come and watch my video, and then you click like. And I really appreciate if you do have some comment in my YouTube video. You know, if you have question, if you want some other video, what kind of topics you like, just put it in the comments. I do answer 100% of my comments. So if you leave a question there, I will answer it to you. Okay. So that's it. That's it for today. Have fun, enjoy, and thank you.